Okay, we're going to try this one more time. One more time. Okay, everyone, thanks for your patience. Looks like we're online again. I want to do a sound check. Can you guys hear me? Yes or no? I'm trying to do some things here. I couldn't get any chat or any audio to work, so let me know. Check, check, check. Check, check, check. Sound is all good. Okay, excellent. Yeah, I just went in earlier and something was messed up with the settings. I'm not sure what happened, but okay. Excellent, good. Okay, so let's go ahead and get started. We're a little bit late today, but that's okay. The markets haven't really done anything, and it's a Monday, so let's do this. So the first thing I wanted to talk about was the trade that we set up earlier, and that was on Litecoin. That trade was a loser. I did that on Friday. It opened up lower. You can see here it was triggered in on this breakout, and you can see right here is where I entered and ended up losing. That's what that was. It was a lose, no problem. Thanks again for all your patience. Okay, so now the next thing I wanted to talk about, if I can find it, was the new spreadsheet we got. And I think I closed that chart down. But I got a new spreadsheet, and the link is available inside the chat. So you guys got a new spreadsheet. One of our generous users gave us that. It's really cool. It's available for anyone to access. You can download it. It's an Excel file. You can transfer it and use it for Google. But I recommend that you guys check it out. It's pretty good. Renee did that for us. It was really kind of him to do, and so that was pretty awesome. So here's what it looks like. You can see everything's looking good here. It calculates all the stats in, and so this is what I've done so far on my challenge since I've been trading, showing you guys my trades. That so far they've been pretty good. This is my profit level. And I've been risking about $923 on average on each trade. So, hey, Reddy, good to see you. So that spreadsheet is available for free, and you guys got to give Renee a shout out and thank him, leave him a comment. I was really cool because all I did was say, oh man, I don't know how to do good spreadsheets, and then he came through and really hooked me up, because before I was having to do it all manual, and this is totally automated. Once I type it in, everything updates. Before I was having to actually automatically add stuff up. So really cool stuff. All right, so let's go ahead and take a look at the charts. So right now on our setups, we're looking for the blue lines, which is potential setups here on EFC on a 15-minute time frame. And right now there's nothing except for these crypto trades, and I don't really want to take a crypto trade, so I'm going to talk to you guys about some other things today, and talk about a different setup, because I just don't see anything happening here on the EFC, and that's okay because you're not always going to get setups. The Euro Yen has one that was recently opened. Let's take a look at that and see if it's still a possibility for an entry. So here's the Euro Yen. Let me add the EFC template to it. So here was the Euro Yen. It triggered. It actually got up about 105 pips, and the stop loss on this is 50. So it was actually a 2-to-1. So depending on what your risk to reward, you may have already been out of this trade. It does automatically set up as a 3-to-1, but usually once I'm at 2-to-1, I'll try to lock in some profit. At this point, this is an hourly chart. Let's look at a daily. Daily is not got a lot of happening right now. It is a downtrend over the long term, but you can see that we've been going sideways for quite some time. We've got, since August, we've pretty much been just going sideways, so there's not a real strong current trend right now. It is a long term, it's a downtrend, and that could resume. But we never know exactly what's going to happen, so we're just going to look at our analysis. But currently, right now, we have this uptrend here. This is a 4 hour. It keeps this, and then what do we have on this? We have here. We've got a little bit of a triangle here. And so if we get a break to the downside, we might suggest that that trend will continue to the downside, the euro-yen. I personally think that that could be a nice setup, to be honest, and I'll be looking for that. But right now on the EFC, it was a strong down move, looking for that pop, and it did, but this downward trend line held it down. And so we're currently in a consolidation. So even when you get a signal on the EFC, you still want to look at your chart patterns and identify what chart and stock you're looking at. And this is currently the euro-yen. This is the euro-yen as to what I'm looking at. So, so right now there really isn't any trades that I can see happening, and so I'm just going to be looking at some setups. They don't always happen when we're doing this, but we can always look at the setups. So I want to just welcome everyone today. Thanks a lot for coming on board. Really appreciate everyone here. Last week was very exciting. We had some great setups and learned some really interesting things. And you know, in my journey of trading, I think the biggest challenge that I've gone through is experiencing drawdowns. And I always share that trading spreadsheet that I started recently, and I'm on a 22 trade journey right now. But 22 trades is really, it's only a month, and it's such a short journey. Trading is a lifetime, and you're going to be trading. You're going to go through many highs and lows and ups and downs, and it's important for you as a trader to remain consistent through it all and to be able to survive those ups and those downs. Like if you look at my current streak, it's an up streak. I'm currently moving up. But what if this was going the other direction? What if I was moving and it was going down and the streak was losing? What if I was going through a losing streak? That's called a drawdown. And to give you a little bit of an example or definition of drawdown, the way that I describe it is that when you hit a high, like right here, this is my profit, but my high, I'm actually in a drawdown, but my profit is $18,000. That's where I'm at right now, okay? And that is my peak, okay? And now, if let's say I go on a 50 trade streak and I don't take out this high, and maybe I go down to 15,000 or I go down to 10,000, then that is a drawdown. And now the next thing you got to remember is, in order for this drawdown to end, I have to break my peak of my account again, which is 18,000. So sometimes when you go through a losing streak, it's going to take you a long time to break your peak. And as a matter of fact, recently, before this, sometime last year, I was in a drawdown where it had lasted extended months. And the thing that is so difficult about this, and again, just to make it clear on the definition, it means from peak to peak. It means a new high. It doesn't necessarily mean I'm losing my money or I'm blowing my account, but it means my account hasn't made a new high. And in trading, you want to always be making new highs. And so drawdowns are something that you're going to have to learn to deal with. Emotionally, you're going to say, well, is my strategy not working anymore? You have to ask yourself that question. And then you start changing stuff, but you don't know what actually is working and what's not working. So you start changing things. Well, then what do? Because you don't know what you changed, or you're not monitoring properly, and then you just get emotional and you say, oh, this doesn't work, right? And so trading during a drawdown is a challenge, especially if it goes extended. So I think some of the biggest challenges in trading are when you're trading in a drawdown, but also another challenge which people don't think about is when you're on a good streak. Because when you're on a good streak, you can make a lot of mistakes because of you think you're so wonderful, right? You're like, oh, I'm doing wonderful. And if you remember last week, I told you guys about I took a run from $60 to $4,000. I took my account up to that point, and the reason I crashed, one of the main reasons I crashed was because I was so overconfident, and I thought I was so wonderful that I could do anything. And so when you're in a really good up move, you got to watch your mental state and watch your rules and realize and stay humble, because you're not a great trader. The market's been good, your statistics are good, your probabilities are good, but you're on a streak. But that really has nothing to do with you as a trader, because all that matters is if you're following your strategy. But it's not because you're amazing. That's not why you had that streak. But in our minds, we start to think that we're amazing. We think that we're doing great. And so the longest drawdown that I experienced was right after I had that big crash, and it was actually about, I'd say 13 months was how long that drawdown lasted, right? And it was terrible. And so there's different kinds of drawdowns that we're talking about here. We're talking about a percent drawdown, and we're also talking about length, right? So your drawdown might only be 10%. Maybe you only drop from 20,000 to 16,000, which would be 10% drop, I think. But then it lasts a long time until you make a new peak, if you could just be trading sideways. And so if your drawdown starts to get very serious on the size, like if it gets to 20% and 30%, well, then what I would do is really stick with your strategy as long as you know that it's been working, but then start really decreasing your risk. Decrease your risk and stick with your strategy until you start to win again. And then when you start to get some of that back, you can pump your risk back up. But if you normally risk 2% a trade, maybe do 1% until you can figure out how to get out of it. And again, this is not something that you want to do as an emotional thing, but rather to test things. Okay, what do I need to change something? Has the market changed? What is the market conditions? What am I doing wrong? Maybe this is a good time to ask a friend. One of the things I'll do is I'll get some help and get some feedback outside, because when you're only struggling with yourself, you don't know if your mind is playing tricks on you or if you're just emotional. So it's good to get some outside advice. It really is. And so I hope that this tip of just pressing through, maintaining your strategy, not getting emotional, and just sticking with the plan and riding through it. Because we talk about mindset being important, but one of the things that what I really want you to understand is that these things will happen, right? You can even see that if you've been following my trading at all, I was on a 6-trade drawdown, and that was pretty difficult to go through. Even though it was only 6 trades, it was still like, oh man, 6 in a row. But what happens if you lose 10 in a row or 15 in a row? Then it really gets mentally challenging to stick with your strategy. And that's part of this, of the game of trading, is maintaining your proper mindset, and so that you can think logically about it. And that's not always easy. And just remember that these things are going to happen to you. Every trader goes through them. And the key to success is to maintaining your discipline and to understand that it's happening and to understand that it's going to happen to everyone. And just keep pushing through, because it's about statistics. And statistically, the drawdown will end if your strategy has an edge. And my biggest thing for that is to make sure that I'm trying to get bigger wins and to catch, so that way when if I am in a drawdown and I catch a nice big win, it gets me out of it really fast. That's what I like. And so, like for example, the last drawdown I was on, when I had a 7-trade losing streak, and I actually broke I broke my peak after the winter because in my 6 losing trades, I lost about 5,000, but in my winning trade, I won 7. So after a 6 losing trade down streak, I broke the entire peak. I broke the drawdown with one trade, and that was really exciting. And so the big winners is one of the things that helps me get out of it, and keeping my losers really tight and small helps me get out of it. Now, one of the drawbacks, every strategy has a good point and a bad point, but one of the drawbacks is the fact that if you have a really tight risk, sometimes you can lose a lot of trades in a row. And losing a lot of trades in a row can be a big challenge mentally. And so it's a trade-off. If you have a really big stop loss, you're not going to lose as many trades, but your wins aren't going to be as bigger. So for me, I like to tighten it up, and I can handle a little bit of a losing streak, but you have to figure out what is right for your mental decisions. There are some traders that want to hit a 60% win rate so they don't lose a lot. Then there are some traders that like to get the big winners. And I'm not going to tell you what to do. You just got to figure it out and come up with a plan on your own and do what works best. So that's one of the things that has helped me, is knowing that statistically I'm going to get through. And I've seen some traders that have good winning streaks or good win rates. They do the same thing. They target maybe a 1-to-1 or 1.5, but they're going on a good win streak if they're hitting 60-70% of their trades. So it's a trade-off, and you got to decide what you want to do. Now, I want to talk a little bit about current strategy. If we look at the current market conditions with everything that's going on, we have to really make some hard looks at the market. And the market's been moving a lot lately, and I'm talking the currency market and the stock market, and we have to be prepared for massive movements. And that means that you could get whipped out. And that means the market can go up really fast and down really fast. And let's say you take a long and that thing goes straight up and then right back down, and it can take you out of your stop loss. And there's times when you can be right about the trade and still lose. Or there can be times when the market can't make up its mind and it goes both ways, and it didn't matter if you go long or short, you're going to get whipped out. And this is that kind of market environment. And so it's important to be ready for volatility, that it could whip you out of your trades. On the good side, that's the negative side of it. On the good side, there's some very big moves. In the stock market, there's been very big bullish moves as well as bearish moves. There's been a lot of opportunity for someone for looking for patterns, for trades, to find really good trades. And recently, I've made some very good trades, and hopefully you guys have made some good trades by looking at your strategy and just looking for breakouts. And once the position starts to move in your direction, you just get in it and you let it go. And so the fundamentals aspect of this, we've got a pandemic, we've got the economy shutting down. There's been some fear, there's been greed, there's been all of these things happening in the market to accelerate this movement. And I'm not a fundamental trader. I can't trade fundamentals. I look at price, because price to me is what is telling you what's happening, because the news is so hard to interpret. People get fearful over one news announcement and then they get excited about something else, and you just never know. And ultimately, we can't even determine what is good or bad for the economy anyways. It's all open to interpretation. And to me, it's very difficult to determine what's going to happen based off of the fundamental data. Like I was just looking at, you look at the dollar, and we just injected the biggest stimulus in the world at $2.2 trillion. Me, as a person who just believes in supply and demand, I think that would be negative for the dollar. I would say, oh man, they just printed all this money. So if you remember economics class, what happens when there's example supply? When there's lots of supply, what happens? Well, what happens? It gets less valuable. It's like toilet paper, right? When toilet paper is limited, it gets more valuable. it's a natural law, right? There's certain things called natural laws on this earth, and one of those natural laws is supply and demand, and you can't really bypass it. And so I would say, oh, that's negative. But that doesn't mean I'm just going to start shorting the dollar because I have to look at the charts. Because I would think that's negative, but maybe the euro's printing even more, or the euro economy is even worse, or that all these other economies are worse, even though it's bad for the dollar to print money. If they're printing more of it, then the dollar will be stronger versus the euro, right? So that's why interpretation is not really possible except for what's happening in the charts, right? And even when we look at, it's funny, the laws of supply and demand, when the president signed that bill, he said, oh, well, this is not going to hurt our economy, or this isn't a bad thing because we are who we are. We're the USA, right? And in my mind, I'm thinking, well, that is kind of bypassing the natural law, which says that when you increase supply, it's going to lose value. But natural law cannot be met. You can't mess around with it. It is what it is. It's going to happen. So with that being said, I say all that to say my bias might be right now for dollar weakness, right? And I want to show you a chart right now. If you have a chance to look at it, it's based off of the dollar index. And take a look at this dollar index chart if you get a chance to. It is currently in a very, very long downtrend. Take a look. This is well, if you look at the chart, you can see that in 2000, from 2000, and actually even beyond, it's a very long downtrend. All the way from the 1980s, the dollar is actually moving down. Okay, and so chart-wise, what is the dollar impact? Any currency, any dollar currency, the euro dollar, the pound dollar, the U.S. Swiss, the U.S. Canadian, U.S. Australian, any of those currencies are impacted by what's happening in the dollar index, because the dollar index is a grouping of all of these currencies together. And when you look at the dollar chart, you can pull it up by just typing in DXY on a charting platform. I use TradingView, and you can pull it up and look at it. But you can see, if you look at a long term, what's it doing right now? It's just smacked into a resistance, right? And it's so interesting that when the news comes out, it is happening to go right into a resistance. Like, how does this stuff even happen? How does the news line up with these chart patterns that have been developing for 20 years? To me, it's just so interesting. But right now, this pattern, this candle, is a hardcore weekly rejection of this long-term trend line. You can look at it. It's a bearish candle right off of a resistance point, and we've got the price that it's actually resisting off of right now is about 102 on the dollar index, and it's a trend diagonal resistance and a horizontal resistance. It's a double resistance, and it dropped. And so knowing this on the dollar index can help you make some dollar trades. And I use indicators and I use trading strategies, and fundamentals are helpful, but I can't really base anything off of it on trade-wise. But I do see this. So now when I'm looking at dollar trades, I'm like, okay, this dollar could be weak. We could be heading for a downtrend. It is currently in a very big downtrend. Now, I'm talking about long-term charts, weekly charts. If we're going more recent, it's actually in an uptrend. So again, everything's based off of perspective. And when I say it's an uptrend, we're talking it's a 10 to 12 years. It's been moving up for 12 years on a weekly time frame. So we're on a 12-year uptrend, but we're on a 30-year downtrend, right? So it's down for the last 30 years, but in the last 12, it's been bouncing back. And so does that mean that this downtrend is going to continue? Well, the downtrend is bigger and stronger. So I would give my preference to the downtrend because it's longer. It has more weight. It has more strength. But if this line breaks, if 102 breaks to the upside, it has not been broken in a long time, since 2002. You know what? That is a big deal, right? So let's watch this level. If we see it, it's an opportunity for some good trades, to allow the trend to move in your favor and to catch some good trades. And so now I'm going to be looking at pound dollars. I'm going to be looking at Euro USD. I'm going to be looking at US yen. All of those trades to get either long or short based off of what this dollar index is doing. And so right now it's in a triangle, and this is a big triangle. It's been going on for years, but it's currently bounced off of the resistance. So for this week, I'm going to be looking at short trades. Okay, so this week I'm going to be looking at short trades for the dollar pair. And so with that being said, let's go ahead and actually take a look at some of the pairs that we like to trade. So I'll take a look at the euro dollar first. Let's take a look at that euro dollar. And currently, the euro dollar is perfect right now. It's in an uptrend, which is in line, and I'm talking about a short-term uptrend. But what's that? That's perfectly in line with what I was talking about right now. The dollar last week was weak, so that means the euro dollar should be strong. And currently, the EFC was showing a little bit of overextended here. It was showing some overextended on the upside, and so it was looking for a short trade. And it actually triggered a short here. And it looks like, I don't know if that was the target. The target's down here. So it's actually currently in a short trade right now. However, remember, I was saying I was looking at some weakness. So based off of this is just that volatility I was talking about. The volatility right now is very all over the place. Okay, so what I'm thinking is looking for a potential long trade on this pair. And what I want to do is wait for a break of a level. I'm probably going to insert an indicator that I like to insert. It's called the moving average. I'm sure you guys have heard of that. It's just a basic moving average, and it's a simple moving average. It's the 50 period. And I add it to my chart, and when this price on a 15-minute time frame crosses above, I will make a trade. I could definitely make a trade right now just for the sake of making a trade for the channel, because I was always talking about doing that. But at this point, I'm just not going to do it today because I want to wait and be patient and get the best entry that I possibly can. So when a moving average of the 50 period gets taken out to the upside, when the trade gets taken to the upside, I'm going to go ahead and get into the trade. Okay, so with that being said, this is a great time for trading. But in recap, just watch your drawdowns, watch your emotional state. Right now, for this week, I'm looking for dollar weakness, and I'm looking for chart patterns to set that up. If you have any questions, make sure you reply or respond. I'm always trying to interact with people and get the feedback that I possibly can. But thank you guys so much for listening in. Really appreciate it. I appreciate everyone. very excited for what's coming ahead. We've got some good things moving forward. Thank you. All right, guys. Well, that's it for today. No trade, but hopefully that training was useful and helpful, and I'll be back tomorrow. I'm going to be doing a live webinar too about growing